Sarah, thanks so much. Bob Iger, thank you so much for talking to us today ahead of your earnings call coming up. So better than expected results, especially on the bottom line. What drove that upside surprise?
Well, we had a great quarter. Parks and resorts, particularly led by our domestic parks, very strong. Studio added two more billion-dollar movies to cap off a record year, a year of for the ages, over $11 billion in box office for Disney Studios alone. And of course, the launch of Disney Plus, where we announced today we had 26.5 million by the end of the quarter. And that's just a tremendous start for a product and a strategy that's extremely important to the company today and in the future.
So you had said that your goal was to have between 60 million and 90 million subscribers by 2024. How do these numbers, these better than expected numbers, impact that guidance?
Well, it's obviously a very good start, but we're not updating our guidance today. We will say something on the call about subs between the end of the quarter, the end of December, and where we are as of yesterday, but we're not updating our guidance.
So
we're only at it for a quarter.
But you have added meaningful subscribers just since the start of the year?
We've continued to add subscribers, yes.
So how many of these subscribers are getting the service free through Verizon?
Well, actually, the ARPU, which is in our release, is actually pretty significant. And that's a blend, obviously, of people who have signed up for a discount. That's a 12-month discount. People who have gotten it through third parties like Verizon, of course, direct. By the way, about 50% of our subscribers came direct from our own website. A lot of that had to do with the fact that they signed up early before it was available through other services. Verizon, about 20% came through that agreement, that distribution agreement, which has been great for us. And then the rest came from Apple and Roku and all the other services that are distributing the app.
So your flagship show, The Mandalorian, which has been entirely released, drew a lot of attention. But did you see churn after the show was over? And do you expect to have to invest a lot more in original content to help draw even more people to the platform?
Well, we were actually heartened by the fact that after the original episodes of The Mandalorian were all made available, we really didn't see significant churn from that. As I said earlier, we continue to see subscriber growth from the end of the year, December 28th, through yesterday, and we'll say more about that. One of the things that we've noted that's quite interesting is about 65% of the people that actually watched Mandalorian watched at least 10 or more other things on the service. And so what we're seeing in terms of consumption is consumption really across the board for films, not only films from our library, but recently released films, including Aladdin and Lion King, of course. Toy Story just came on. Avengers Endgame. We're also seeing a lot of interest in other original programs that we've created, movies and series, great interest in Disney Channel shows, and then broad interest in just a lot of other things, Pixar shorts and older Disney shorts. And clearly those brands, Disney and Pixar and Marvel and Star Wars and National Geographic, are resonating, which, as we've said at the beginning, gives us the ability to focus more on quality, high-quality branded content for the service, and less on volume. We will continue to add. We've got a lot coming up. We just had a spot in the Super Bowl for 3 new original Marvel series. Mandalorian will come back in October. We have more Star Wars series in development. There are a lot of original movies. So that will continue, and there will be growth in investment in original content. But this will never be what I'll call a pure volume play. It will be about high-quality branded content.